The Minister of Finance, Planning and Economic Development presented 6 tax proposals to the legislature that, if approved by the President, would change the existing laws governing income tax, value-added tax, excise charges, tax procedures, and lottery taxation with effect from 1st July 2023. Additionally, the Ministry informed the committee that the revenue strategy for the fiscal year 2023-2024 is to continue implementing the domestic revenue mobilization strategy, which entails both tax policy and tax administration reforms for sufficient revenue up to 16 to 18% of GDP by the end of the fiscal year 2026-2027.
The ministry further noted that to reach the desired target of at least 16% of tax to GDP in the medium term, government targets to increase revenue by at least 0.5% of GDP per year.
The government plans to raise revenue from 25 trillion shillings, or 13% of GDP, to 29.3 trillion, or 14% of GDP, in the fiscal year 2023-2024 in order to broaden the nation's tax base. However, given how quickly digital transformation is occurring globally, taxing industries like agent banking and non-resident digital companies could worsen the nation's unemployment problems, burden agent banking, and harm the economy.
People who are starting life, they go to their uncles, they come to our sisters, give me an upstart, and they start a 2 million banking, 500. Secondly, there are so many districts, including mine, where there is not even a single ATM or a single branch of any bank. The only way we are finding inclusion of the majority of Ugandans into the money formal sector is through agent banking. It is still an infant industry that needs to be supported. Burdening it with the tax at this time is counterproductive.
The impact of this taxation shall be that whatever tax that we impose on those companies, they will factor in and definitely, incidentally, heap it on the backs of your own people. So at the end of the day, it will increase the cost of your operation of business. Who are the biggest beneficiaries? The young startups, players.
The Uganda Revenue Authority is well equipped with skilled tax collectors and auditors to detect any tax avoidance in accordance with Income Tax Sections 90 and 91. It also has the authority to deal with businesses that are deceiving customers and those who are legitimately making taxable losses, in addition to taxing all trading losses that will reduce people's profitability.
A trading loss can happen, but I can have a trading profit, which I've explained. But at the end, because of these tax regimes, I end up in a taxable what? Loss. So the URA and my brother Musasizi is saying now, we should tax that loss. Madam Speaker, this thing has been around for 5 years. And all the 5 years, it has been rejected.
While it is vital to widen the tax base for socio-economic development, it is equally important to be mindful of the potential negative impact that excessive taxation may have on the economy. Bronia Katusiime, Smart 24 TV, Business Today.